Hi everyone, welcome back to another video. Today we'll be talking about central banks' digital currencies, and I know a lot of you are not into economics, but I really think this is something that we should be talking about because number one, this might have a big impact in your future, and the sooner you know about these technologies and policies, the better you will be. I don't care if you don't have a college degree, I don't care if you're studying medicine, law, arts, engineering, whatever, if you're rich, if you're poor, because throughout your life you will have to deal about with money. And money is changing, and this is essentially what this video is all about. Number two, I have a degree in economics, and right now I'm writing my thesis, which is in economic and financial issues of fintech. So this is my background after all. And number three, nowadays in the news, there's a lot of things that are happening across the world that pass unnoticed, let's call it that. And I'm not just speaking in economic terms, economically, I'm speaking about other domains of other nature, and it's really easy and understandable that you can get like distracted by the number of increasing cases in your country, and you'll skip these types of news. So I'm just bringing news as a refreshment, and hopefully you will learn something new from this. My advice: be in all communities, be active everywhere, don't be in this fighting mentality, and trust me, this will be the best for everyone and the best for you because most of the opportunities come to you when you are in this open minded state. You are alert and you know where things are heading, or at least you can adjust yourself to where you are heading. And with that said, let's get into the video itself. You are still here? Good. And why are we talking about central banks' digital currencies? Well, I am recording this video on the 20th of October of 2020, and for the past couple of days we've had the IMF annual meetings, and of course I'll leave the links for those seminars and conferences in the description if you want to check them out, or if not, you can just watch this video where I will specifically address one of them, which was yesterday, called cross-border payments. And in the first panel, we can see that we have really big names. We have the Managing Director of International Monetary Fund, Kristalina Georgieva, as the moderator. We have even names like Jerome Powell, the chair of Fed, and I don't want to butcher anyone's names, but you can see them on the screen or in the links of the description. And if I had to sum it up like into 1 minute, I could divide it into 4 segments. The IMF would be like, let's all collaborate together for these central banks' digital currencies. Then we would have the US, aka Jerome Powell, saying, calm down everyone, we are not really in a hurry. Then we have Europe saying like pushing, yeah, we should do this, let's control this. And then we have Asia saying like we already have that. Of course this it didn't went like this, but the IMF was obviously pushing for collaboration in central bank digital currencies. The US, Jerome Powell actually said, I wrote that down here. In fact, I actually do think that central bank digital currencies is one of those issues where it's more important for the United States to get it right than it is to be first. And with that, it means yes, basically the US are in dominant position because the dollar continues to be the world reserve currency. So yeah, I would have done basically the same as Jerome Powell, so I can understand why he was saying that. But nonetheless, the US are also right now in a really fragile position. Maybe next week I will make a video where I will show you some charts that can really and you can really see the fragile position they are. They are like really walking on thin ice. They are in a danger zone. But enough of that. That's for another video. And then we had Europe. Obviously they for the past year they were a bit freaking out with Libra, Mark Zuckerberg. So this is a really good way for them to push this. Yes, of course. And Asia, evidently they already do that. For example, In China, they are already airdropping money to the population. So yeah, that was it. And they were all talking about how central banks would be in the future essentially just creating their own digital currencies, and how would that affect the global monetary management system. And this is essentially a new Bretton Woods agreement, and perhaps now it's a good idea for me to pick up my laptop or show you the screen. And for those of you who don't know what is a Bretton Woods agreement, or you're not familiar with it, it was essentially just a global monetary management system that was implemented after the World War II in 1944. So this is something that's really big. As you can see here in the title, I'm not kidding. In the October 15, the managing director of IMF, Kristalina Georgieva, basically came out with an announcement talking about the new Bretton Woods moment. And this article alludes to a huge change coming, but lacks real clarity outside of allowing much more fiscal stimulus. And now moving to the cross-border payment vision for the future. Yesterday they come with this, and I just want to say that they are not the first, because a year ago Mark Carney at the Bank of England set the course for a new system, and also in the past year the European Central Bank also discussed this many times, but now it's clear that central bank digital currencies are coming. So they are going towards central banks digital currencies. And what do they mean? You're probably thinking, surely like currencies are already digital now anyway. I mean, I pay with my credit card. I can use apps like MBWay. MBWay is here like in Portugal, but I can use apps like a Cash app to transfer money from my phone to other people's phones, bank accounts. It's all done digitally. Well, not quite, because all the money transfers nowadays pass through banking institutions and banking systems. And with these central bank digital currencies, basically you have a digital wallet that's directly connected with the central bank. And the IMF calls it the cross-border payments platform, so that you don't have to use those awful wire transfers. And that's good, because you should be allowed to transfer money instantaneously across borders. And you can see right out of a batch that private banks, bank institutions are in a sticky situation. So they are basically creating payment railways so that we can be able to, like one person should be able to transfer money worldwide to another person, but at the same time, this gives central banks the ability to give money to people directly, because let's face it, central banks are running out of monetary policies. The interest rates are already at zero or negative in most countries. And this is a way of doing direct monetization. They can't do that right now. They print money, which goes to a banking system. Banks hoard it, and their reserves are basically high. And money doesn't get to the system, so only the good creditors get their access to money. And so in this recent crisis, we've seen governments trying to give direct payments to corporates and loans, but sometimes these payments did not occur, or the processes were really slow, and the damage had already been too severe to fix any of the problems. How do you survive this? With the digital currencies, central banks could have given you the money directly, and that was the kind of stimulus that they wanted in the first place. And here are some positive aspects. So the digital currencies are also a way to quick start the universal basic income, because these central banks can carry or support the poorer parts of society by giving them money directly. And it doesn't go on any government balance sheet. And one problem is that central banks think that they can expand their balance sheet forever. MMT has been the prevalent thought, and I'm not saying that they can do this or they can't. I'm just expressing my concerns. And if you study economics, this is like just a big mind, Keynesian mind that's been put on steroids. And yeah, and here are some notes. Number one, this could be a good way of solving some of the world's problems, like the SWIFT problem, the euro dollar funding market, solve the problem of getting money to the people who really need it. Number two, the central banks can change the way, the structure, how money and monetary policies and fiscal policies work. Because just imagine this situation, they can give money uh, in different ways to different people. Let's imagine during this pandemic, uh, there was a bar owner that decided to open his bar. Right now, he had to lay off his workers, and so they could directly give money to him. But at the same time, imagine someone like a boomer, like in his 50s or 60s, um, that has been saving during his life. They can just say, okay, we need this money to be circulating in the economy. So they indirectly or directly can make that person spend money. So they could attribute to his account negative interest rates. So he would be losing money because in that case savers are losers, or they can put like some expiration date. So okay, you have 5,000 euros here in your bank account, but you can only spend them in the next, I don't know, 45 days, and after that you lose your money. So those kind of things can happen. It's not also always like all the good things. You are losing some kind of degree of freedom. Number three, the rise of behavioral economics and incentive systems, and that reminds me of China. So governments essentially can use big data, and they can find who they need to stimulate at any time and adjust accordingly. This is a structural massive shift to everything we understand about economics, particularly macroeconomics. And of course, all of these will be sold on good things, and this in fact is a fancy or elegant solution for some of the problems that were stated before, but as always, there will be unintended consequences. Which leads us to note number four, and that is to be part of this system, you will have to give up some of your freedom, and that was briefly mentioned before. And that's because every transaction that you ever done or will do will be recorded. So that means you can be taxed in every transaction, and that could be good because in that way you don't have to. It will be easier to do like IRS, and it will be easy to deal with those tax collection agencies and stuff like that, because everything will be publicly, but everything will be recorded, so it will be much easier. And that's good, but at the same time you've lost your freedom to transact like in cash, where you could do transactions anonymously. I don't know the word, but you got that. Then again, we already lost some of our freedoms in terms of behavioral economics when in the rise of Google and Facebook, and how they manipulate us all day and all night for their own economic goals or for the ends of their advertisers. And I just want to point out that I'm not against this. It's just like the natural cycle. Because after all, we are experiencing a new Bretton Woods moment, and the new system will eventually replace the current regime. We already see the central bank's digital currencies in China, in Sweden, and I think Singapore is ready to launch. And I just noticed that it's getting really dark in here. I hope this video isn't getting too long, but I really don't want to divide it into part 1 or part 2. I promise you that we are already well over half of it, and I will just pop the IMF logo or some images to follow my speech, and yeah, I'll just pop the IMF logo. And so the IMF have made it very clear that it means that it can agree en masse for countries to stimulate on central banks at the same time, so that everybody can print money at the same time and we don't have to get these big currency dislocations. But this kind of seems that they are going to debase the entire fiat currency system. And if you track the price, for example, of gold to other currencies, just don't look entirely like Euro, US, just search currencies of smaller nations and countries, and you will see that gold is getting more and more expensive in those currencies. And this debasement of currency is a way out of that. If you want to know more on that, I have a video on long-term debt cycles, and you should definitely check it out. And yeah, a lot of that you just debase your currency, inflate your way out. And as you can see, this type of news can really let you thinking. My advice is for you to start learning a bit more about personal finance and financial literacy, because when the change will be about to happen, you'll most likely be one of the last to know. And why should you? You don't really care about these subjects, do you? And yeah, that was it for today. I hope you liked this video. Like I mentioned earlier, I think next week I'll try to upload a video on explaining how the fragile situation of the US. And I hope you like this. Don't forget to hit that like button, it really helps out the channel. Subscribe for more, and see you next week.